Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on the Dixie. Specifically, we're going to talk about the 3-year cycle. So that's the idea. 3 years, roughly 36 months. We are in month 22. So that has really big, so there's still a lot of, there's still a lot of months left in the potential cycle. And so where we are in that cycle, if we're declining or still advancing, is very important. And we just got a big signal that we are starting to decline. And let's just jump to that right there, right? The monthly chart. I've talked about this and I tweeted about this earlier. If you're not following, you can take a look at for a link in the description. We had two inside months, right? So like October was an inside month, meaning it's inside the range of September, this big candle here. And then November opened inside of October. So you have an inside month that's inside another inside month. And so that created two zones, right? The high and the low from October as well. So we broke down below the low from October, and that was your first signal that we were likely to break down below the low from September. Now, what's important is the reaction from here, right? Do we make a lower high below 107.70, right? Like that would be your signal that we are starting a downtrend on the monthly chart, which is probably a 3-year cycle top, right? I mean, look at this 3-year cycle. I mean, observe the price action. It's very clear, right? There was this time when we had this lower low, like this was April 2021. Look at this. This was really scary, right? Like I'll zoom in, right? So the 3-year cycle had bottomed in January 2021, and we had 2 up months, February, March, and then we had this inside month, but it was red, so kind of ugly. And then we made a lower low in May, but then we recovered it all and then some, consolidated, and then just kind of up from there. But since that's happened, notice the little few red months that were interspersed did not make lower lows, right? This was just a red doji-ish month. This was an ugly shooter that looked like it could be trouble. But look, it got nowhere near the lows. That's the important thing, nowhere near the lows. Even this red month, this was May 2022, nowhere near the lows, right? Just consolidation at the upper end of the range. That's an important concept, consolidation at the upper end of the range versus lower end. So month 20 of the 3-year cycle, and these things don't have to be exactly on the dot. That's not how it works. It's just a rough time frame for how long the general rally and retracement lasts. That was month 20. It's possible that that was the top. So think about that. If it is roughly 36 months, that means we could decline for the next, well, we're already 2 months into, we would already be 2 months into the decline. So we decline for another 14 months-ish. And again, it doesn't have to be 36 months on clockwork. The last one was just happened to be 35 months. The one before that, you could argue, was 45 months, which is way more than 3 years, obviously, right? That's closer to 4 years. You want the one before that was 36, the one before that 38, 39, 39, 27, 42. So 27, that's really early. 42, also really late. 31. So you get the picture. The point is, let's watch the price action, and you can see very clearly the next significant pivot on the monthly chart is down here at this 104 spot 78 level. And you'll see on other time frames that level is important as well. But that's the next level we're really watching. And notice we're up here at 106.8. Now we maybe get a bounce, but that would be your target, right? That's where I'm probably going to lighten up on some of my puts. I've been in some puts for UUP, which is an ETF that tracks the dollar index. Very low implied volatility. And so that definitely looks like an area of interest, right? And I've been talking about the fact that this 50-month moving average, look at that. Like we've had periods, each of these, right? These major lows, we went below that moving average, right? This is definitely going to be a lagging thing, right? Now, and it is rising, of course, right? So it's going to catch up to price to some degree, right? But the idea is that we would expect our cycle low somewhere around January 2024. So again, we're talking about basically the entire year of 2023. That's the kind of trend I want to trade, right? Like something that's going to last a really long time. Now, it doesn't mean every single month is going to be red, but the idea is that you would be, it would be a downtrend on the monthly chart. And so that's something that you can kind of comfortably sit in some leaps, let's say, that expire in January 2024. And so that is going to be that's what we're watching. So there's still quite a bit of month to trade, right? And so that's important. I talk about this all the time. Candles transform in the process. Like right now, this monthly candle looks really bearish, right? But it's only November 11th, right? So there's a lot of month to trade, and so this thing is going to transform. It's going to build a lower wick. That's the first stage. We opened at one. Wait, what is it? We opened at 111 spot 517. So we'd have to get above that level to go green. I don't know. We could get. I don't know. There doesn't seem to be any kind of catalyst that would get us anywhere near there. So we're probably going to remain red. Best case scenario, maybe we build some kind of lower wick. But let's look at the lower time frames. We'll zoom in to the daily chart, the daily cycle. We had our high on day 5, our swing high, and then we're now on day 10. But look at the decline in terms of percentage. So since the swing high on, so the previous, like you can see structurally, that's the major swing high, right? Up here, right? These others are just lower swing highs. That's a 7% decline from here to here, right? And that swing high occurred on September 28th, right? So basically, that's your trend for October. So basically, this October period, right? If you zoom in to like the decline since this swing high on day 5, which was November 3rd, right? So 5 trading days ago. That's been 5.7%. So basically, most of the decline has happened in the last 5 days. So that's a pretty stretched move to the downside. So I wouldn't be surprised if we get a sharp move up, but I would expect it to be a lower high, right? Like it's very clear this downtrend that started. So we had this. So like we had this. We'll start here, right? We'll zoom in, just make sure we can. So we had this move up, then we came down, then we did this. That's a lower high, right? So wouldn't be surprised to see something like that before something like that. And something like that. Right? Not, this is just illustrative purposes, but like the point is price isn't going to move in a straight line. And also considering this is day 10, I mean, we could fall for another several days, judging by how long these, I mean, this is kind of erratic in terms of the cycles, but day 10 is pretty early. And that's why when you have a top on day 5, that's why that sets you up for a pretty big decline, because it means you probably have a pretty long decline, like a pretty, protracted trend leg lower. Now you're probably going to get some kind of bounce, something that looks like this maybe, right? Some kind of lower high, maybe Monday, maybe early next week or something like that. That will be a chance to load up on once that lower high gets kind of printed and you can see the swing high forming on a lower time frame, like let's say the hourly. That might be the signal to add puts. That's what I'm going to do. And you can see the 200-week moving average in yellow. It's clearly kind of calling out to us. This pivot right here also coincides with that. That's that 104.7 level we talked about on the monthly chart. It all coincides. This is multiple time frame analysis, folks. Looking at, in some ways, the daily chart is almost like a time machine into the future to kind of tell you what's going to happen to the monthly, right? Remember I talked about how is the monthly candle going to close? Well, if we're going to continue to decline in the daily cycle, that's going to put bearish pressure on the monthly candle. And what we really need to understand is the weekly cycle. So the weekly cycle, we're on week 23. That's pretty late in the weekly cycle, but we've also had weekly cycles that were like, 25, 27, 30 weeks, 33 weeks here. So we could have one of those longer ones. The top was week 27. And again, you can see on the weekly chart, these pivots all stick out. They stick out on the monthly. They stick out on that's not a coincidence because price aggregates at that level. It's kind of agnostic to time frame. It'll just show up on the structure. So again, that 104.6, like that 104.5 area is a magnet to some degree. And if we start to print lower highs If I go back to that monthly chart, if we start to print lower highs below this swing high here, that's your real signal, right? On those lower time frames. So far, we've obviously received a lot of signal. And if we look at the quarterly chart, I'll kind of close out with this one. You can see how this is setting up. Remember, obviously we have this month to close, and then there's December, so there's a lot of trading to happen. Again, same principle. But look at this furious rally out of the 3-year cycle. This is another way to look at the 3-year cycle, right? We had this one red quarter, but then just up only. Now we're finally getting some consolidation. Well, so far it's just consolidation. That next level, right, that is also right. So that would also give you so that 104 like in a half level, going below that actually gives you a quarterly swing high as well. That is another and really important signal, right? The higher the time frame, the more important the sort of signal, obviously. And if you look at the yearly, it's still very green. We're just kind of building an upper wick. So that's going to be interesting to see how 2023 plays out as you start to think about sort of the chess game. How does the cycle, like how low do we really go, right? That's interesting, right? Because we started at like 94. So it looks like we're probably going sub 100 on the Dixie. But I'll take it one day at a time. Right now, definitely, I wouldn't be surprised for some kind of rally at some point, maybe even to close out today. This just is really stretched at almost 6% in 5 days. But we'll see. I think the trend is lower for sure. And I would say the probabilities have shifted that the 3-year cycle top happened in September. Doesn't mean, like, I'd say we need to see those lower highs below that swing high first to really feel confident, like to increase that probability. But it's definitely increased pretty dramatically with this big downside move. That suggests we're going to get a lower high here, and let's see how it behaves. So that's the update on the Dixie. Big update on the 3-year cycle here.